Hi there, I'm David from DB Chartered Accountants. Following the formal exit from the EEC on the 1st of January 2021, we're all aware that trading with the EEC countries is now different, and consequently, somehow, we all must prepare our VAT returns differently to account for both imports and exports. So that I could advise not only clients, but also our own team about these changes, I thought I should look into this new situation to try and provide guidance on how bookkeeping, and in particular VAT returns, should be done in this new situation. On this subject matter, please don't look upon me as being an expert. I'm definitely not. However, I somehow feel that many so-called experts on the subject are shying away from doing what I'm doing in this video in fear of possibly getting it wrong. I don't profess that all I am going to say in this video is cast iron correct. However, I feel that someone has to make a start in providing some guidance on what is a mind-boggling minefield. Please also bear in mind that I am only concentrating on the impact of changes that relate to UK VAT return entries. There are many issues relating to registering for VAT in other countries, the introduction of a one-stop shop, and dealing with Northern Ireland that introduced greater layers of complexity which are beyond the scope of this video, and on which you probably will need the advice of someone who specialises in cross-border VAT issues. I was alarmed at how confusing the situation relating to just VAT returns entries is. I have attended webinars on the subject, done my own reading on the issue, and still possess a degree of uncertainty about what should be done. The information that is available on the notices on gov.uk are bewildering and send you round in circles. So much so that it left me more confused and uncertain of what the correct position is. As I am not a VAT expert and thus thought before I could do this video I would check my views with someone on the VAT helpline. Much to my surprise, it became extremely evident that those on the helpline didn't have a clue either. When I asked them a direct question for clarification, they dodged giving a straight answer by saying the guidance was online and I should refer to that. When I said that the guidance was difficult to understand and confusing, and on the face of it somewhat contradictory, and thus pressed them for a response, it became clear that they simply did not know the answer. I tried several times to get someone to provide answers and the same situation arose. They simply didn't know. One even hung up when I tried to explain what I wanted, after waiting the usual 45 minutes before I could speak to them. Eventually, I asked to speak to someone who did know what they were talking about. I was told that I would have to make an appointment to speak to a so-called expert. So I did this and had to wait 2 weeks for the allotted time of my telephone appointment, only to find they failed to contact me at the appointed time. When I followed this up, I was informed that the expert couldn't call me because the person making the appointment in the first instance failed to record my telephone number. Words simply fail me. Can you believe this? The person with whom I was supposed to speak to, who was supposed to be an expert on imports and exports, but didn't know how to simply web search to find my telephone number. It speaks volumes. The person that informed me of this, however, probably through embarrassment, patiently sat on the phone well over an hour to try and wade through my queries, and for that I was most grateful. Like me, he had a vague idea of what ought to be done, but lacked certainty about some of the key points. Thus, we both had to plough through reams of government notices to find some of the answers we needed. This long preamble has been essential for you to understand the nature of this situation. As I have stated, I am not a VAT expert, and I am still not totally certain of my ground here. However, I firmly believe that some help and guidance is needed in order for business owners out there who no doubt was as uncertain as I was. The aim of this video is to start a dialogue on the situation, It is not an expert opinion on exactly what to do, but simply my take on the situation that I put out there as a straw man for anyone with any detailed knowledge on the matter to comment on, to either agree or disagree. I thus ask for all viewers of this video to not only listen to what I have to say, but also follow any commentary that others may have put below. As I am uncertain of my ground, I will endeavour to quote the sources for what I have to say, so that you can retrace the ground that I have covered. I wish you all good luck with this. Also bear in mind that there are many exceptions within VAT that in effect rubbish any general rule that you try to put forward. Thus you need to proceed with care and do your own due diligence on this extremely tricky area. So let's make a start. We'll start with what is possibly the easier option, which is exports. Firstly, let's consider export of goods. Any goods that leave the UK is now deemed to be officially an export. As an export, then this should be a zero-rated supply. Thus, as long as you have required proof of export, you can zero-rate this supply. Most bookkeeping software will have no difficulty with this and will get the treatment correct, which is to put nothing in box 1 on your VAT return and also put the net sales value in box 6 as an addition to the outputs that you declared on your VAT return. It's thus safe to say that no UK VAT is charged on exports. However, sales to other countries, particularly to EEC countries, are likely to require you to register for VAT in those countries and thus pay VAT equivalent to the local tax authorities. This may cause you difficulties as you may need the assistance of a specialist firm who deal in foreign VAT, and these tend to be expensive. This may be made easier when they introduce what is referred to as a one-stop shop, whereby you can register in one country to do the reporting for sales to all EEC countries. Due to the benefits of language, it's likely you may choose to register in Ireland. If you trade on an online market platform such as Amazon, then they are responsible for collecting and paying the VAT on sales to EEC countries. Even though they do this, it does not stop you from having to register in these countries and make VAT returns. However, how do you account for transactions that are subject to non-UK VAT or equivalent taxes? Any foreign VAT suffered should not be coded to output tax in your software, but treated as an expense to an account such as foreign tax suffered and coded, I presume, as outside the scope of UK VAT. Thus, in my view, you post it as follows. The sales value, include full value of sale in box 6 and nothing in box 1. Expense, foreign VAT and taxes suffered outside the scope of VAT. So what happens about the export of services? Services are more complicated. The place of supply is determined by the type of customer you are dealing with. If you are dealing with a business customer abroad, then the place of supply is deemed to be where the customer is. If you are dealing with a non-business customer, that is a consumer, then the place of supply is where the supplier is based. This does not affect your UK accounting treatment. Exports of services are still zero-rated. Thus enter the sales in box 6, but nothing in box 1. However, when you are selling to other business customers, then you may have to register with the local VAT authorities and account for VAT on your sales. If you incur local VAT, then you treat the payment of the VAT in the same way as indicated previously. I thus put on my tin hat and wait for the flack that my views on exports might stir up. And then I turn to the equally confusing situation on imports. At this point, I need to mention that there is not just one type of VAT on the purchases that you make. Normal UK VAT on purchases is incurred, often referred to as input VAT. However, there's another type of VAT which is called import VAT. This is the amount charged on consignments of goods that exceed £135 in value. As the goods reach the ports, they will be held until you pay the import VAT and possibly any excise duty. Thus it's likely that you will first pay for the goods, which will involve no VAT. Thus in your records you will enter goods, the amount you pay for them, VAT input tax 0. This will record the value of the goods in box 7 on your VAT return, but nothing will appear in box 4. Then you will pay the import VAT. Record this as a net payment of 0, but with the amount you have paid being entered as VAT. Your bookkeeping software may have problems with this. You may need to find a workaround solution to cope with it. However, the effect that you are looking for is to put nothing in box 7, as this has already been done when you paid for the goods, and the import VAT gets put in box 4. If you do a lot of importing, you may find that the delay whilst you pay the import VAT is something that you can't afford, and thus you have the option to use what's called postponed VAT accounting. If you opt for this, the goods will be delivered to you without delay and without you having to pay the import VAT at the point of importation. However, if you do this, then you will have to do what is called a reverse charge. This involves a degree of bookkeeping chicanery. First of all, you will calculate the amount of VAT that will be chargeable on the imported goods, as if you were supplying them to yourself. This amount is then recorded in box 1 and in box 4 of your VAT return. Thus you declare output tax and input tax of the same amount. For most businesses, this will have a nil effect on your VAT return. This will only affect businesses that are partially exempt, who may not be able to recover all the input VAT. As with any supplies of goods, you also put the amount paid for the goods in box 7. Thus, imported goods are recorded in box 1, box 4 and box 7. This applies to goods imported if you have opted for postponed accounting or for consignments with a value below 135 on which no import VAT has been paid. Having got your head around the concept of a reverse charge for goods involving boxes 1, 4 and 7, you then have to look at the illogical and even more confusing concept of the reverse charge for services. Where a service is supplied to you from a supplier abroad, then again a reverse charge is involved. However, in this case a further entry is needed in box 6, as the supply of services is treated as a deemed sale. I know this sounds crazy, and the guy on the helpline did not believe me either, until we discovered it's at this location. And as you can see here, you have to put it in box 6 as well. Thus, for imported services, the VAT treatment is to put the amount paid in both box 6 and 7, and the calculated VAT in box 1 and 4. Confused? I am not in the slightest surprised. Even if you have understood what I have said hitherto, it's one thing knowing what you must do with the various boxes on your VAT return, and another to work out exactly how you achieve this with your bookkeeping software. Most of the leading software providers such as QuickBooks and Xero or Sage, for example, will no doubt generate a way of dealing with these tricky issues. I'm setting to creating similar solutions for our clients in our own software that we provide free to our clients called Debonair. However, I wish you luck with this, as I doubt if the helplines for the software have much of an inkling of what I have just discussed. Please view this video in the light that it has been created. I'm not saying categorically that it is how it should be done. It is merely the way that I see it at the moment. Any contributions, amendments or insights from those more learned than me on this subject are more than welcome. In conclusion, please note that I accept no responsibility whatsoever for any action you may take after watching this video. You should always bear in mind that what I have said in this video is a generalization. VAT is jam-packed with exceptions to any rule that is either obvious or not so obvious. Thus, if you have any doubts, then you will need to contact HMRC on the helpline for an answer. Or maybe not. Before you do, I would suggest you do your own reading on the voluminous guidance on gov.uk, so that you at least get your own take on this incredibly difficult and confusing subject, which you can add to what I have just given to you in this video. Good luck, and thank you for having the patience to listen to this very long video. If you need any help, you can contact us on help@deb-accountants.co.uk, or you can telephone us on 01226 245824. Please subscribe to our YouTube channel so that you get notifications whenever we upload any new videos. Bye for now.